Well, let's start. Good afternoon, everyone. My name is Michaela. We'll be moderating this panel. Before we start with the questions for today, I will let the speakers kindly introduce themselves, and then we can get the ball rolling.
Hi, everyone. My name is Dorian. I work for KuCoin, People's Exchange. I'm leading the business development sector in the EU.
Hi, my name's Chantal. I work at Deribit. We are a crypto derivatives exchange, sixth biggest derivatives exchange in terms of volume, but indisputably the number one in options. We've got almost 90% market share, and we list BTC, ETH, and the options, and we have a number of USDC-linked perpetuals as well.
Hi everyone, my name is Danita. I'm part of the BD team Europe at Bullish. Bullish is a regulated institutional crypto exchange. What's pretty unique about our business model is that it's a blended market structure. So it's a centralized exchange with DeFi features such as automated market makers. We launched in November 2021 and are now the top 3 in the world for Bitcoin and ETH spot trading and top 6 for overall spot trading.
Thank you. Hello, everyone. Nice to meet you. My name is Elke Karskens. I am the country director for Coinbase in the UK. We're one of the world's largest crypto exchanges, publicly listed and about 10 years old. We just had our 10-year coinversary, which we celebrate every year. And I predominantly look after the retail business, so growing basically the UK market here. And excited to be here. I'll hand it back over.
Thank you for the introductions. The first question for this panel will be, what users take into account, or what are the key factors that users take into account before choosing a crypto exchange?
Who wants to start?
I can step in if you don't mind. Yeah?
Of course, let's go for it.
So as a user, if I were to put myself as a user, in a user perspective, let's say, first thing that you need to look at is obviously the relevance and security of the platform that you're looking at. So in many cases, you have to rely on the information that's available to you on the internet. If the exchange has been there for a long time, has been assessed by other users, has been assessed by even media, etc. You really need to fish for some information out there that are relevant and verified. Then you have to look for more technical aspects depending on what type of user you are. If you want to trade some spot, for example, on some typical, very peculiar products that you will not find everywhere, you have to make sure that the exchange is into listing such assets. So for example, at KuCoin, that's our case. We really focus on listing small and mid caps that are not listed elsewhere. And thanks to that, we actually give them the opportunity for a large, let's say, proportion of retail users to access such assets before they become trendy, before they are listed on larger exchanges that are our competitors, among which Coinbase, for example, who lists after making sure it works very well on KuCoin often. So that's actually, we're very proud when all of our tokens end up on Coinbase, by the way. So yeah, on this stage, you also need to look at the liquidity that is provided by the exchange, if you can actually trade in good conditions, because without liquidity, you will end up overpaying, having a huge spread, and not being able even to resell your tokens or your assets when you want it to be sold or etc. And then security on the platform as well. You have to make sure that the platform has the state-of-the-art parameters, security parameters, including for the users, meaning that you need to be able to double authenticate your account. You need to be able to have customer support available 7 days a week, 24 hours a day, etc., etc. I think I'll let you go on so that you can add up.
I think from an institutional perspective, since we are an institutions-only exchange, the two things that matter the most are probably liquidity and, as of now, regulation. Liquidity is still a huge problem in crypto. What tends to happen is when things get volatile, the same players tend to crowd around the same price points on the same venues, which means that they can't really trade in size. So we've tried to address that problem by bring your own liquidity type of business model. So we put our own liquidity into our liquidity pools and then have other participants add on. So the prices are stable and the liquidity is always there. The second thing I would say is regulation. Since most of the institutions are already regulated, they're looking for this credible, grown-up counterparty that's able to provide, transparent access to the markets. So I think, probably if we were here a year ago, most of the exchanges wouldn't even be considering getting regulated, whereas now that's become a real topic. Then where we should all be getting regulated is a completely different debate. Looks like Europe is definitely winning right now, just in terms of providing a clear regulatory framework. We have just submitted for a BaFin license in Germany. The reason we did that is because we feel like this is the highest standard and just the most difficult one to obtain among the European countries. So hopefully that would get us passported into the rest of the MiCA countries. But yeah, I'd say from our point of view, these are the two key factors.
Shall I go back to retail then? Shall we do that? Retail and then back to Insta. So first and foremost, do your research, right? And really understand what is your risk tolerance. At the end of the day, you are accountable. And how do you ensure that the exchange that you choose is one that you trust? Well, our research really shows that the trust of a brand really comes down to a company's financials. How are they using and treating user data? What are their security protocols, etc. So when you think about choosing an exchange, like the first thing to sort of look at is transparency. How are the fees communicated? What does their governance look like? What are their financials? But also when you think about security, how's their KYC? Do they have two-factor authentication? Does it feel rigorous enough and legitimate enough? And how does an exchange go about education, right? Do you fundamentally feel that you have the right information in front of you to make informed decisions? So those are a couple of factors that one should take in consideration when deciding, what to exchange go for. And again, the risk level of somebody that has never embarked into crypto looks very, very different to a day trader. And there are certain platforms that fit a certain use case better than not. But at the end of the day, do your research because ultimately you are accountable.
So from my perspective, we're also an institutional platform, so 90% of our users, of our volumes are from institutions. I would agree with what everybody's saying, very much transparency and trust, and also a track record of how you've treated customers in the past. So, for example, a year ago, I think, as Tisa was saying, not many exchanges were thinking about regulation. Now all of the exchanges are applying for different licenses in different countries, but the regulatory landscape is still a little bit unclear in quite a lot of jurisdictions. So I think there's definitely going to have to be a bit more indication of what's going to happen. So obviously with MiCA being discussed in Parliament and with the FCA, and I think the next year is going to be very interesting on that. Also, market quality and liquidity. I mean, people go where the liquidity is. So with Deribit, we've got 90% of the options market. So if you're going to trade options, you have to trade it on Deribit. The competitors have got a couple of percent each. And they're doing a lot of sort of market maker schemes and initiatives to try and get people to trade on their platform. But obviously, people are always going to go where the liquidity is. And as long as the market quality is there and the size is there to trade on, that's where people are going to go.
Thank you for those two perspectives, I would say, from the institutional side and the retail side. My next question would be, how has the recent surge in popularity of the centralized exchanges impacted traditional centralized crypto exchanges? Have these had an impact on the products that you're currently developing, and if so, how?
Okay, I can kick off if you want. I think the innovation that decentralized exchanges are bringing to the space is extremely important and fascinating. So I think the trend of traditional exchanges, centralized exchanges, borrowing DeFi features and integrating them into their central limit order books is only going to continue. At Bullish, that's the core of our business model. We essentially combine a central limit order book with automated market makers. That way we cater to the institutional clients by providing them a framework they're familiar with, but also we give them access to the exponential innovation in the DeFi space. And you actually see that also by looking at the numbers. I think the DEX share of centralized exchanges is at 22% right now, which is all-time high. And I personally expect that trend to continue. Also, if you look at Uniswap's V4 with the hooks at the singleton that they came up, just the way DEXs think about liquidity and innovate around it is fascinating. So I think that's a trend that's here to stay.
Thanks. Okay, let's try to fix this. I'm apparently not that technical as a person. Well, you guys are much more intimidating on this side of the fence, but you're all right, don't worry. To go back to decentralized exchanges and what their impact has been on our business, definitely with the events that we've witnessed in 2022, we realized, or I think all centralized players realized that we needed more hybridation, at least in terms of product, and also to have decentralized versions of our products when necessary for users to have the choice, which is in the end the most important thing. People, I mean all users of cryptocurrency in general, exchanges, should have the choice to go decentralized if they wish to. That's not what the majority does, but this option needs to be on the table. About your 20% of volumes in DEXs, I think it was actually on a very specific day when there was a huge volatility and some crash. Yeah, exactly, when the SEC attacked, etc. Overall, generally speaking, on average, DEXs still retain about 10 to 15% of volumes after all the events that happened in 2022. So the reality is that most people actually do not go to DEXs. There are reasons for that. Maybe we can explore them a bit later because that would take us too far. But in the end, that also means that we have a responsibility as centralized exchanges to like hybrid products when we can to develop our own decentralized versions, as I've mentioned, but also to like bring more people in and give them the knowledge so that they get this option to decentralize. Because in the end, if they don't get to a product that is more turned towards retail, that is more turned towards users in terms of UX, and if it's not easy for new users to onboard, then there will be nobody to use decentralization and decentralized versions of products at all. Like we need to onboard them on the simplest versions of our product to bring mass adoption. And this is going to be the challenge actually in the year to come. How to bring this mass adoption? It will be to simplify UX up to a point when people, when they join this space, will not even know that they are joining cryptocurrency, that the whole Web3 infrastructure behind it is there to sustain it. They will need to integrate it and to join and start using our products without even knowing the technical structure behind it, which is how actually people onboarded on Web2 in the beginning.
Yeah, I actually agree with most of what you said. Like, I think fundamentally the promise of crypto is to make money and payments available to everyone. So if we zoom out for a second and just talk about like centralized finance, that really is the system that governs all financial industries within which a user's fund is being held by a central organization. And all players within that stream, they take a bit of a cut. But I think that in the US, something like 5% of users are unbanked, and that is in one of the most developed markets in the world. So if you take a much bigger perspective and you look at emerging markets, hundreds of millions of people don't have access to financial services. And that is because either they can't meet the minimum balance requirements, the fees are too high, or there's a lot of superstition, well, maybe not superstition isn't the right word, like skepticism with traditionally managed organizations. And it's actually for those users more important that they have access to financial tools like insurance, like credit. And that is where decentralized finance comes in, which is amazing because it's fast, it's transparent, it's anonymous, and it basically gives those that don't have access to centralized finance access as well. And we fundamentally at Coinbase believe that this isn't a sum-zero game. It isn't around centralized versus decentralized exchanges. Like the pie is big enough. Wallet users, for example, with one click can enter DeFi straight away. So there is enough opportunity for all players within this space. And we fundamentally believe that the more people that participate in the crypto economy, the better. Yeah, I'll leave it with that.
I actually, from Darabit's perspective, I'm less bullish on DeFi. So I think from a kind of from a spot exchange, I kind of agree on everything that you're saying. But from our perspective from the options, I think there's still very little, like for institutional adoption, we're getting the institutions involved, there's still very little KYC, if any at all. And I think that for proper institutional adoption, like that needs to change. I also think they don't, from the options perspective, like they don't have portfolio margining, so you can't offset your positions against your futures. So some of the technologies are a lot further behind than on the centralized exchanges. And also the protocol is a lot slower. So for us, a lot of our clients are high-frequency traders, prop firms, and so wanting to trade fast. So we're actually co-located in LD4, where all the traditional exchanges are as well. And so, you know, it's all about speed. And so I think for the kind of those customers, they're not going to be trading on DeFi until that catches up, and I don't see that happening anytime soon.
Yeah, I agree with you. If I could just add to that, I think there's a lot that can be borrowed from the centralized exchange technology in terms of, you know, what you mentioned about latency. Also, off-exchange settlement. We had someone from Nico Digital earlier on the panel saying that they've moved 5% of their trades to 95% from on-chain to off-chain settlement, and KYC, obviously. So yeah, I mean, ideally, we'll be bringing the best of both worlds to deliver these like smooth experience for institutions. Also, in terms of onboarding the next billion into crypto, the centralized exchanges just provide a much smoother and more familiar like interface, and that's something that also, not to mention the gas fees that are still a problem with the DEXs, but hopefully with the rollout of the various layer 2s, that's getting solved progressively.
I couldn't agree more with everything you said. I think the lesson of this answer will be we're going to see more of those. As Anissa said, the combination of both hybrid products in all of our exchanges. In terms of transparency, this was actually a question that was requested to be on the panel. How are crypto exchanges promoting transparency and fair trading practices to build trust among users and investors? Both, not only retail users, but as well institutional clients that are currently trading with us.
Should I start? So I think since obviously what happened with FTX, all of the exchanges have become a lot more transparent. So previous to what happened with FTX, there were very few exchanges, centralized exchanges, that were connected to custodians. And I think this is the real missing piece at the moment in terms of larger institutional adoption. So Deribit has got a partnership with a company called Copper. They are a third-party custodian. Essentially what you can do is you can trade on Deribit from your Copper account, and your assets would never leave your Copper account, so therefore you have got less exchange risk. We integrated with them about 3 years ago. Nobody used it. Since FTX, a lot more people are using it. I think what happened to FTX was probably the best things to have happened with custodians. Now, a lot of the other exchanges are integrating. So Huobi have integrated, OKX have integrated. Don't think Binance have yet. But I think this is definitely kind of the missing part. And as we kind of go towards a more sort of traditional finance element, we'll see more and more of these happening. So we're also integrating with Fireblocks. So some institutions don't actually want to have to trust the custodian, because essentially you're taking the risk away from an exchange to a custodian who, as of yet, is not fully, Copper's not regulated yet. You've got the bank kind of custodians that are starting, building really good products. I think Copper was probably the first product out there, and now there are sort of more traditional custodians who are trying to catch up with them. But that's definitely the missing part. And so Fireblocks is another kind of, it's not a custodian, but it's self-custody. So if you don't want to trust a custodian, you can actually still have, it's self-custody, so essentially everything would still be in your environment, and an exchange would be able to have visibility into what assets were in your environment. So essentially, you wouldn't be trusting a custodian, you'd have custody of your wallets, but the exchange would be able to have sweeping rights to go in and take those assets if the trades were not to go in your way. Another thing that is happening is obviously the regulation, but also initiatives such as proof of reserves. All exchanges now are showing their proof of reserves. So, for example, Deribit, every day there's a daily file. If you're a client, you can go in, you can download the file, and you can see your assets within those reserves. from our perspective, it's very easy to do that because we don't have that many customers, because we're options, not that many people trade options. So for a much bigger exchange like a Binance to do that would be a lot more difficult, because you wouldn't be able to it would take, I don't know, like hours to download that file, but for us it's a lot easier. And then also, I think just being more transparent, so kind of financials, releasing kind of like annual penetration test reports, filling in due diligence questionnaires for different funds who are asking for that now.
Yeah, just focusing on this point of proof of reserves a little bit. Actually, the way we solve this, both Binance and us, I think, because we have the same, well, they have a larger problem, but we have kind of the same problem in terms of scaling this proof of reserve, is that we release it every couple of weeks or every month. So it actually like makes it in a, like, how do you say, responsible time frame for users and still manageable for us, technically speaking. So yeah, that helps. And actually we have to consider in this space specifically that we will not do everything right the first time. What happened in 2022 really showed that there is a lot to be done yet, and we are not done with it, obviously. But we are building, we are improving, and with the proof of reserve, once again, if you compare to traditional finance industry, you actually cannot have this proof of reserves that you can personally verify and check that your assets are there in the banks or whatever. So in this way, we are already doing better than our main competitors. It's a big step forward. Hopefully there is much more coming, and yeah.
Yeah, just on the point of proof of reserves, we also do that. Unfortunately, proof of reserves doesn't give you the other side of the envelope, which is the liabilities. So one extra step that we at Bullish took, for example, is we get audited by Deloitte. Our 2022 report just came out, and that gives you also the other side of the story. With regards to custody, our starting point was regulation. We launched the exchange when we were already regulated. So sometimes it depends also where you're regulated. So for example, the GFSC requires over 70% of our assets to be held in cold custody at all times, which is why we custody with BitGo. We've just integrated with Fireblocks. But yeah, I agree with you, Chantal, like custodians, now we've basically transitioned the risk from exchanges to custodians. So in that sense, you're seeing more and more exchanges getting more and more custody options just to spread that risk.
I'm not sure I have that much to add, to be honest with you. I think on transparency, it's been already said, like understanding like the financials of the organization, proof of reserve. But I think if we're answering the question of transparency in the context of what happened in the last 12 months, like regulation is going to be absolutely crucial for this industry. And you see some jurisdiction, the UK included, really racing towards getting regulatory frameworks in place as soon as possible. The UK is a really good example. Sunak has, well, stated on multiple times that he has the aspirations of the UK becoming a crypto hub, and he fundamentally believes that blockchain technology in Web3 can be a driver of growth, but it has to happen in a way that protects consumers, but still allows for innovation. So we're seeing regulation obviously shaping up in the UK, you mentioned already as well, in Europe, Hong Kong, Singapore, Australia, and all of these jurisdictions are really racing ahead to getting the right regulatory frameworks in place. And listen, at Coinbase from the get-go, we have been pro-regulation. We have been working with policymakers and regulators from the get-go. And I think that these jurisdictions that are indeed embracing that are creating a competitive advantage, especially with what we're seeing in the US right now. So yeah, transparency in the context of what happened, regulation done in the right way is partially the answer to that.
I might just quickly add to Duran's point on the proof of reserves. I think it's, you know, the fact that in traditional finance, we don't have that, and you get like a year-end audit, which, you know, the audit report gets signed off sort of a year after the end of the year, so it's not in real time at all. Whereas at least with the proof of reserves, there's something we can do it on a daily basis because we have got a lot less clients, and you guys do it every couple of weeks. But again, that's a lot more kind of like real time than say an audit which happens sort of, you know. I think a lot of audits have been signed off that potentially, like, you know, 9 months later, when they were signed off, it wasn't as transparent as sort of what one would hope it would be.
I'm very grateful with Chantal that brought the topic of traditional finance and how things are done in TradFi, because my next question will be specifically for Chantal and Denise, is how institutional clients are doing that transition between traditional markets and cryptos, how the institutional sales teams of exchanges are helping with that transition, what mechanisms are in place in order for them to fully trade digital assets with the best practices in place as well.
For us, it's really applying the same KYC requirements to our institutional crypto clients as you would see in traditional finance. You know, source of funds, how the account is going to be funded. You know, who are the UOBs? How is this account going to be used? Just really basic transparency. We also KYC all the coins that come in and come out of the wallets as well. So for me, it's just applying, you know, basic logic and basic, you know, requirements to our institutional clients. Nothing more, nothing less. That's pretty much it.
Yeah, I was just going to say again, sort of going through KYC, I think a lot of the crypto exchanges have sort of been, I wouldn't say it's self-regulating, but they've been doing a lot of initiatives, like much stronger KYC than say sort of 5 years ago, in order to onboard clients, proof of funds, like proper KYC. Again, I think that it's the kind of use of custodians I mentioned before. I think a lot of say like a prop trading firm would be quite happy to have their assets sitting on an exchange. However, if you're a fund and you're taking external money, it's just you know, their shareholders just would not be happy to have the assets on the exchange. So it's kind of like seeing where this custody element is going to go. There's a lot of custodians out there at the moment that kind of I think it's a very interesting time to see which ones are going to make it and which ones aren't, because there are a lot out there that will have a slightly different offering, slightly different client base. And as an exchange, you can't connect to every single custodian because you then, with the way that it's moving towards traditional finance. So with Copper recently, we've just gone live with end-of-day settlement. So every day, so previously within Copper, like there was an omnibus account. So all of the client funds were like intermingled in one account. Now going forward, they've got a tri-party agreement. So if, say, for example, something was going to happen to Copper, there would be an escrow account, tri-party. And so at the end of each day, we will have our assets also with Copper. At the end of the day, there'll be a settlement, and every account will either get money taken from that account into our Copper Deribit account within Copper, or the other way around. So I think that's another way that institutions kind of get more comfort and being able to offer initiatives like this.
I would like to add one more thing on this. Before my current role in Binance, I was part of Huobi Global, of the institutional sales team, and I realized that there is one key thing to help with this transition between traditional clients, from traditional markets to crypto. And it's pretty much exchanges are now trying to be as much as flexible with them as possible, in the sense of tell me what are your needs and let me see how from this side can we help you. In traditional markets, when you go and request certain trading conditions, there are certain parameters already set. There's not much to do there. But in cryptos, or I don't know if you can agree with me, we do make the effort to listen very carefully what are the trading necessities that you currently have, and let's see what can we adapt, how can we offer you the best possible service. And that's really something I like about the market being really in its infant phase, because that means that we can be as flexible as possible with clients. We can also say no to certain trading conditions that they need, but at the same time, I do think that there is a very flexible aspect in all of those institutional teams that are making more and more and more traditional clients transition to crypto. Do you agree? It's the same in your case? Good. I think the next question will be, in order for crypto exchanges to support the development of innovative derivative products, specifically for digital assets, what impact does this have on market participants and investors? how do you envision the growth and the potential of the crypto derivatives market in the coming years? Chantal, I think that this is definitely your question.
Yeah, I think we're the only ones that actually Coinbase is now doing derivatives as well. They just launched it. But I think the derivatives market has done really well in the last year, so it's massively growing. I think the options market in particular, it's really underrepresented compared to traditional finance. So in the crypto world, it's about 1-2% of spot. And if you look at sort of equity options, it's about 35 times that. So it's still tiny, tiny, tiny. And there's a lot of space to grow. So Deribit was the first to launch options. The guy that set it up was an options trader based in Amsterdam. So he had all of those contacts from before. And when he went and wanted to set up an exchange, essentially, he thought he was too late to start a spot exchange. So that's why he looked at options. And basically the options, the guys all after him had just said it's far too early, this is 2016, and nobody's going to be trading options at the moment. But 2 years later, there was sort of spin-offs from IMC and Optiva, kind of got the first market maker, people started quoting, and more kind of, I think then in 2019, more institutional money came in, people started trading more, the spreads got tighter, and the market got a lot better. And now I think in the last sort of year, that's when sort of the traditional finance players have also entered the space. So it's highly underrepresented. And it's only recently that people have launched their options. So Binance launched them in June last year. Bybit launched, I think, March last year. OKX have got a few percent. But what's been quite interesting, just observing how the market's grown, is that it doesn't look like people are taking Deribit's market share. It looks like Bybit and Binance are sort of investing on educating, and there's a massive client base for trading, so the perpetuals and the futures that wouldn't be trading options. So just investing in education and just teaching people the benefits of trading options. And so I think, as the market grows, Deribit's not going to keep that monopoly. Maybe it has a 50% market share, but the market's bigger. And so therefore we'll have sort of, less of the pie, but a biggest proportion of it. But I definitely see it growing. And if you look at kind of every time, volatility is our friend. So every time, there's volatility. So when FTX went down, that was when, so many options are being traded. In the banking crisis in March, we had our best month ever in terms of BTC options traded. So we had our open interest reached 20 billion, which is double what, basically it was kind of, we reached it a couple of years before, but the crypto BTC was double the price. So it just shows that sort of twice as many options contracts were being traded. So it's definitely a very, very underrepresented market, and I definitely am expecting it to grow.
Yeah, I fully agree. I also think the pie is only going to continue to grow. We're launching perpetuals later this year as well. We know that institutions are more comfortable to access the market through these products first. So just agree with you. The market's only going to grow. And actually, I think if you don't have these products, you're probably going to fall out of relevance. So everyone should have a strategy around that.
Just mentioning retail in this story, actually, because options are also a product that retail users, everyone can access. But it's true that there are all these technical terms that are not very friendly to retail users. And if you look at it the way it's being branded right now, we have this dual investment product on most main exchanges. Should it be on Binance or on KuCoin, etc. It actually works the same way as an option. We just removed all the technical terms and tried to explain it as simple as we could without, the, let's say, financial literacy that's needed to understand exactly how it works. So we really advise people to take a look, because now these new products are being they are there, they are available. And the only thing is you really need to read about how they work before using them. Definitely, there is a bit of work behind it, but it's also having an opportunity for a product that's normally not so easily accessible to retail, to everyday users.
Thank you. The last question before we open the panel for the questions of the answers will be, what are the next trends and developments that you guys foresee in the markets in 2023 and 2024? Before you start answering, if there is any questions that you would like to do, please keep a note of it, because probably we'll have time for one or two. Then we will need to wrap up.
So, you should start.
Go the other way around. I think I mentioned regulation. We believe fundamentally regulation is going to inform the success of this industry long term. Other things I think I'm excited about is sort of seeing the growth of use cases and really the utility of this ecosystem. Do you know, in tech in general, it's often easy when you look back and you see, oh, that was what it was about all along, right? Because fundamentally, the main drivers for people to get into crypto tend to be investment related. But yeah, use cases around wallets, for example, we just launched Wallet as a Service, better known as WAS, because we're seeing a lot of interest from more mainstream traditional brands to have native wallet solutions embedded within their product. So really seeing those use cases coming to life. We've also just launched Base, which is an Ethereum layer 2 low-cost solution. We're seeing huge traction on that from developers all around the world, and like deeply excited to see what's going to be built on top of that as well. So I think the thing that I'm most excited about is really on those two ends of the spectrum, having the right regulation that protects consumers, but doesn't stifle innovation. And then seeing those use cases flourish, that in 10 years when we sit here again, hopefully we're like, oh my God, of course that was how Web3 was going to work out. And this is how I'm using it today, and even an elderly generation. So really those use cases growing over time is something that I'm excited to see grow.
I personally think, just going back to your point of regulation, I think we're going to continue to see the euro as a percentage of overall volume grow. So it's doubled since the beginning of the year. And given that we're getting regulatory clarity in Europe ahead of the US, I'm only expecting that number to grow. Linked to that, I think, is we're also going to see a growth in the euro stablecoins. We have projects being pitched to us on a daily basis. I think it's very unlikely for the European Union to let Circle take the lion's share of the stables market, simply because it's an American company, and as we know, unfortunately, these things get political. I think that's a second interesting trend to watch out for. And then the third, as I mentioned, everything that's coming out in terms of innovation from the DeFi space. I think the Uniswap V4 that's coming out later this year is extremely interesting, just not because of the way they're going to amplify liquidity through the hooks and the singleton, but also by the way they're bringing more and more sophisticated traders in the space. So I think crypto is going to also change the way retail trades overall. We're just going to get way more sophisticated traders over and over again. That's it.
Yeah, I agree with both of you in terms of regulation. I think having some regulatory clarity is going to be very helpful, and I think that that's going to be the main focus the next couple of years. Also, I think, again, like I said, greater use of custodians. I think kind of like having that hybrid world between sort of kind of what's been happening in crypto previously and going forward, having your assets on exchange, especially if you've got external money, is just not something that's going to be happening going forward, especially if we want to have proper institutional adoption. Yeah, I think that's also growth and options. I think, again, really underrepresented. So I think that we'll definitely see that market growing, and excited to see how that's going to go.
So on my end, I would say first that it's not my first bear market. At KuCoin, it's not our first bear market either. And there are reasons to be optimistic about this one. I mean, I don't know if you've heard, but nobody has been claiming that Bitcoin was going to die for at least 10 months, 1 year, which is not bad as it takes. I mean, we're still in the middle of it, but yeah. So some steps have been crossed. We're not getting back there. You're not hearing from your mainstream media that Bitcoin is gone and gone forever. That's actually quite good. Then community-based, as once again, we're kind of people's exchange. We try to use the user-centric approach. What we've seen is very interesting. And the bear market is actually an interesting moment to try to listen to your core community more, because all the statistical noise that comes with the bull market and the fact that every project is like pumping one after the other, all this is gone now. It's very rare when this kind of frenzy takes the markets during a bear. Then you can actually focus on the users that have been there with projects for a long time, which are genuinely interested in the project or more deeply committed to it, and all these communities that they managed to build. And we've seen actually that even during the bear market, many projects managed to build communities. So it has been about meme coins for some part of it. And in some ways, we can say that there is better to do than meme coins. But in another way, these projects have shown that they are very efficient at creating communities and sustaining them, which is, at KuCoin, we're not there to judge. If there is an actual community that needs to be serviced, we will be there to provide the service. We are not there to judge the utility of the token, say if the project is going to fail or not. That's not our role in this. It's just if there is an organic community that actually needs us for our services, we will be there to provide it to them. Then obviously we will do the relevant work regarding security, auditing the project, the code, etc. But apart from that, once again, we are no judge. It's actually you who are the judges. So yeah, the communities that we've seen during the bear market, they are still working hard. And so in many ways, it doesn't resemble the ones that were there previously, which were, let's say, much slower in terms of what was going on. There was much less. And yeah, the pace of development, we've seen new ways of, we've seen new ways, for example, of preventing access to personal data on the blockchain if you want to, but without having the kind of controversy that Monero provided in the first hand. That's, for example, zero knowledge proof and zero knowledge proof rollups, etc. All this has been done in the middle of a bear market, and the projects are there and they're working. So all these elements tell us that we have good reasons to be optimistic. Now it's actually our jobs. I'm in the larger exchanges, Coinbase, Binance, KuCoin. We have to onboard people. We have really to make it obvious for people that there is a use case for them there and that it's easy for them to use, so that then they afterwards get the choice, if they want, to join decentralized products, to even go further on the journey of cryptocurrencies, Web3, etc. But our main job for the next bull is really going to be how to bring this mass adoption come true, how to do, because we always have this discussion with the internet. The internet had kind of the same situation. We were like struggling to get to this 1 billion user, but once we got to the 1 billion user, it actually skyrocketed. It went exponential. Well, this didn't happen by itself. There were companies in Web2 that created the products, created the processes, so that people actually joined Web2 and used it and enjoyed it and spent more and more time on it. So now that's our job.
Well, we wanted to open the Q&A for questions, but unfortunately the time's is up. So what we're gonna do... Sorry. Thank you, Dorian. So what we're gonna do, we're gonna just be around after this panel. I guess it's best just to do one-on-ones with anyone that wants to dive deep into one of the questions. And thank you everyone. Thank you again to every speaker. Until next time, I think.